Welcome to the Mortgage Broker Podcast, where we explore everything related to mortgages and the home buying process. If you're a first-time buyer or a seasoned investor, this podcast is for you. I'm your host, Vanessa, the Mortgage Broker. So, let's get to it.
Welcome back, everyone. Today I have a special guest with me from First National, April. So happy to have you here. Thank you so much. What we wanted to do today was give you more of a perspective from a lender's point of view of what's happening in the market space, and what you can kind of look forward to as buyers or a client who's coming up for renewal on a mortgage, and the kinds of things that they're seeing in terms of affordability.
Oh, thank you so much for having me. I'm super excited. This is the first time I've ever done anything like this, so yeah, it should be a good time. It should be fun.
So do you want to tell us a little bit about your role with First National?
Certainly. So my role is a manager of business development. I work on the prime side of the space because we also have our Excalibur, which is more of the B lending space. And I cover a territory between London, Windsor, and Sarnia. And yeah, I just help out my mortgage broker partners and just seek to add value where I can and yeah, help you guys out.
So you and I both know what A space, B space.
Mm-hmm.
I don't know that most of our viewers actually know what that means. So do you mind kind of giving us an idea of what?
Prime space are clients that have those solid beacon scores. Their income is solid. There's nothing strange going on in their situation. They're able to qualify for that prime lending space. And, you know, oftentimes we see clients that for whatever reason, whatever situation is going on in their lives, that they're slipping into that sort of A- space, and they just need a solution that's going to help them get over that hump, whatever that is. Like maybe it's a new employment situation, they just became self-employed or that sort of thing. And so having that Excalibur side of the business to be able to come in and provide that interim solution for the client, and you as the broker to be able to say to the client, hey, it's not a no. We have a solution for you, and here's a plan to be able to get you back into that A space.
And I can't tell you how rewarding it is when a client listens to you while they're in that E space.
Yes, which is important,
and
right?
You put the plan together, and you're coming up to that renewal a year later, and the whole focus is to get them back on that prime side within, you know, the parameters that lender is going to allow at the lower rates. Because on the B side, the rates aren't so much higher, it's more so that the terms are shorter, and then there's fees that are applicable.
Yes, so it's more of a short-term,
a short-term fix.
Yes.
So that's always my favorite when I have a client who we put the plan together, it's coming up for renewal, and they've listened, and I pull that beacon score, and I'm doing one of these, and able to move them back into the prime side.
It's rewarding.
Very. It's one of my favorite things, other than broker complete funded, but
yes.
I mean,
everyone likes to hear broker complete.
Fulfillment is happy. We are good to go. So there's been like a lot of talk lately, especially with where the markets are right now, hinging more so on where the markets have been, and we have an announcement coming up, next week.
Yep.
So I know that we're all kind of sitting on the edge of our seats. What are you kind of seeing?
Well, as you can imagine, in my role, I do get asked very often, what do you think rates are going to do? Are they going to go up? Are they going to go down? What's going to happen? And in my very own humble opinion, I see a lot of speakers, I go to a lot of different events, I attend a lot of different conferences, and to be honest, I sort of sit back and listen to it all, and I take it in, but there's definitely a part of me that looks and says, nobody really knows. Nobody really truly knows what that environment's going to look like and what's going to happen. I guess my advice for folks that are perhaps sitting on that sideline and they desperately want to get into a home, those first-time home buyers, my advice to you would be, listen, don't sit back and wait. If you have that down payment and you're in the position to make the move, there's no sense in sitting on that sideline and waiting, because the reality is that interest rates and home prices those levers don't work together, which means rates come down, home prices come down. You can't wait for that.
No.
Because it's never going to work the same.
No.
It's always, rates are higher, homes are coming down a little bit more. And then the moment that rates go down, that home price. So if home ownership is important to you, then don't delay, get in. And I know that there's an amazing saying going on right now that is, date the rate, marry
the mortgage.
Yeah. And it's just more about what is it that you value, where are you at in your life, what's important to you. And if home ownership is important to you, I encourage you not to listen to all of the noise, because let's face it, in today's day and age, there is a lot of noise that's going on out there. You're going to have from one extreme to the other. I say if home ownership is important to you and that's something you value, just get in. Just get in. Just do it.
Well, and in speaking with a lot of people in this market space, especially like Southwestern Ontario is primarily where a lot of my clients are. I do service all of Ontario, and I'm also licensed in Nova Scotia. So looking at the two markets are like drastically different. Like right now out there, it's gone back to like over asking, multiple offers, because we're coming up to that. Like we're going to be moving out of spring back into the summer, and people are going, oh, but I could have a vacation home in Nova Scotia on the water instead of in the Muskokas for $1 million.
Right.
You know.
And here's the thing, just like with every province has different temperatures, right? It's the same thing with the mortgage business. It's not a one size fits all sort of thing. You are going to see those different markets, and First National, we are Canada wide, right? So we definitely see that pulse, and we see that difference in. I can say last year we saw a huge uptake on Alberta, right? I don't know if any of you. I always heard the question, Alberta is calling, right? So there's always those ebbs and flows of market change, right? And so you really can't compare what's happening in Ontario versus what's perhaps happening on the East Coast versus, and I mean, Quebec is a whole other, very different, right?
Well, and talking to different industry professionals, with taxation or real estate agents, it kind of goes back to right now, like home prices are not going to be any cheaper than they are right now. And especially if the Bank of Canada does start to make that movement and the rates go down, you've now got way more competition because there's been all those same people waiting on the sidelines. And so would you rather pay 0.25%, 0.5%, even 1% more on 100,000 less on a home? Or are you waiting for that to come down 1% and now you're going to be mortgaging on another 100,000, depending on the market and like where the home is, but
right. And I think the challenge here is that we're human beings, and we're emotional, And let's face it, buying that home, that it is a very emotional. It's a very emotional experience, and a lot of emotion goes into that choice. If you're able to step back and remove that emotion, to your point, and look and go, okay, well, what makes sense, right? And make that decision based off of that, you be much further ahead, right?
And you guys see, in terms of when clients are purchasing homes, especially on a purchase, are you seeing more of the insured mortgages under the 20% down payment over, like what is that landscape kind of looking like right now? Because from where I'm sitting, I have a lot of clients who are getting early inheritances from grandparents. You can't take your money with you, might as well start, transitioning those funds down. So I am actually seeing more 20% down payments right now. So it's interesting because in a market that's supposed to be very difficult, it's not typically what I'm seeing right now.
Right. I would say I'm seeing a lot of that high ratio purchase and that conventional, as in I have more than 20% or more to put down. I would say that those are really neck and neck.
Okay.
Right? It's a pretty even split.
So I'm not really seeing anything much different then.
Very neck and neck.
Okay.
It's that refi that I don't see as much of that just because of where rates are today. So I think if those rates start to come down, you will see more people look to consolidate the debt that they have. And to touch on your point previous too about home ownership and when is a good time to get into the market, I think that we need to grasp and understand that we know as a fact that we have 500,000 plus new to Canada, coming to Canada year over year over year. And people need to understand that new to Canada, these people are coming to this country and they're coming here with money.
With money.
Like they're not,
Yes.
yeah, they come here with money, and home ownership for them is very important. They have the funds, and to them, they're not necessarily concerned with home price versus rate versus, like, they're not concerned about what that looks like. They just want in.
Home ownership.
Right?
Yeah.
So we know that that's a fact, and I don't see within the next 10 years that solution's not coming anytime soon. So we are still going to see that pressure, and I understand from the Canadian government they're trying to alleviate those home prices from going out of control, but with the rate hikes that have been happening, like we just saw that we got slammed with it last year, like one after the next, after the next, after the next. And all of those people that were out there buying and selling, what happened to them? Where did they go?
Right.
Well, they didn't disappear, right?
No.
They are now standing on the sidelines, because when people are afraid of what's going on, they're not sure what's happening. What do when they're fearful? They do nothing.
Right.
They're standing on the sidelines. And people have been standing on the sidelines waiting and waiting and waiting.
Uh-huh.
And the reality is that life events are still happening. So, you had another baby, you need a bigger place. You're getting divorced, you need to sell your place. You're, taking on an elderly parent, you need
or you're renting and now all of a sudden you don't have a place to live.
Right.
Yeah.
So I feel like there's sort of like this pressure cooker of a situation where I feel like no matter what they do, I don't know what the right decision is, right? Yeah.
Well,
we're going to see it.
Yeah. The one thing that's never going to change is supply and demand.
Yes. Right.
Unless there's more supply.
So again,
we can't control the demand.
Those homeowners that are standing on the sidelines, there is no magic solution to it. There's no, just if home ownership is important to you and that's what you value, get in. And make sure that you're utilizing a professional when you're doing it. End of story.
That's a very good point. Thank you for that. I also like how you brought up the fact that the new to Canada, 500,000,
that
they're coming with money.
Yes.
Because that is not something I think that the general public realizes.
Yeah.
They just think, oh, we're bringing in all these people and there's nowhere for them to live, and now there's going to be an even bigger homeless issue, which, I mean, that's an entirely different conversation.
And a different group of people.
Right.
Yes.
Right? But that they're coming in with money, with down payments.
Yes.
And that's going to be who people in their own communities that they've grown up in, want to stay in, want to raise their families in, are going to be up against when they're making an offer.
Well,
and it becomes a competitive situation.
Yes, and here's another interesting stat is that Canada Guarantee, which is one of the insurers here in Canada, shared with us that, because they see it, right? They know where new to Canada are settling. And in the past, new to Canada, they would seek out large city areas.
Yeah.
So they would be seeking out, the Torontos, the Vancouvers, like those big city centers.
Yeah.
Well, over the past couple of years, that trend has changed. And now, new to Canada is spreading out into those smaller bedroom communities.
Yeah.
So you're going to start to see more of new to Canada people coming to, the Brantfords, the Londons, the St. Thomas, the Windsor,
because they also want to maximize the funds that they're bringing over here.
Absolutely,
right?
And they too. I mean, let's be real. They've got kids.
Yeah.
They want the same as what everyone else wants.
And I know one of the slogans from the insurers, CMHC, Canada Guarantee, and Sagen, is like, people are driving to survive from the GTA. They're going east, they're going west, they're going north.
Spreading out.
Right?
Yeah.
So, if they're moving over with money, they're also going to want their funds to go as long or as far as they can.
Yep.
So as we know, there are different types of lending facilities. We've got the bigger banks, we've got monoline lenders, which is what First National would be considered, and then we've got more of like your alternative mortgage investment company, and then like true private lending. I think the biggest question that general homeowners would be asking is like, what is the difference between a bank and a monoline lender?
So yes, First National, we are a monoline lender. We have been in business for 35 plus years. So we celebrated our 35th anniversary last year. And we are all across Canada. We are the #1 monoline lender in all of Canada, which I'm proud to say.
It must feel good to say.
Yes, feels good to say. But I would say probably one of the biggest differences is that we are a fair penalty lender. So helping clients understand that if you're looking at that 5-year term mortgage, most clients by year 3 are requiring to make some type of change. And when they start looking at that penalty versus how the banks calculate the penalty versus how First National calculates that penalty, it could mean the difference in savings of thousands and thousands of dollars. And I know, we always commit our future selves to, oh, no, I'm in this house, but life is what happens when you're making other plans and things come up. So that's one of the bigger differences. Another big difference I would say is that with being a monoline lender, we offer a lot more solutions. Whereas when you're walking into a bank space, all that they can offer you is that bank solution. So we have a lot more products or solutions or different types of things that we can offer clients to help them be qualified. The other big piece for us would be that all we do is service mortgage brokers. That is it. We don't have, all these branches across Canada where we're selling, Visa credit cards, lines of credit, bank accounts. We don't have that. It is only our mortgage brokers that we focus on. And I would say what sets First National apart from most is our level and dedication and obsession over servicing our brokers and servicing their clients. So something that was deep within the culture at First National, I would say, is that we're not looking at that client as a mortgage number. When we look at that file, we look at that as there's a human being on the other side of this file.
Right.
And let's face it, buying a house, moving, selling, these are really stressful things. I think that there's a stat out there that it's one of the top, like apart from someone dying in your family, going through a divorce, moving.
Oh, it's right up there.
It's right up there, right? And so I think from our culture to be able to look and say, this is a human being, here's their situation, and we obsess over servicing our mortgage broker partners as well as that client, so that if something goes wrong or something, like it's all hands on deck to make that right for the client and help that client. And just as going through that process of servicing the client and the broker setting up the mortgage, it's equally important after funding. So when that mortgage closes, the service that the client is going to receive after funding. So we have our My Mortgage portal, which keeps it very plain language. Our portal, when you log into that portal, it's written in simple language. It's easy to understand. It's not complicated. You're going to know how to go about doing things, changing payments, making prepayment privileges, anything like that. So it's also the service level after the fact, and that this is all that we do. Right? So.
And prepayment privileges. Can you talk about that?
Oh boy. Okay, so 2 different types of mortgages.
Yeah.
Right? So you have your standard term mortgage versus our adjustable rate mortgage.
Yeah.
So adjustable rate is 15% double up and 15% lump sum. Our standard is 15% double or 15% lump sum, double up, and increase as well. And it's pretty cool because you can use them all in tandem with each other.
And it doesn't have to be on a specific
doesn't have to be on a specific date, no. And you can log into My Mortgage portal and you can play with it all you like. There's calculators on there to make sure that you're not going to go over and over contribute, right? Because you don't want to do that. But it really helps you to be able to go in there and just, set it all up yourself.
Yeah.
And we also have a lot of great little videos on our website that if you're wondering, what does that look like? How do I explain that? Even for client, like how do you explain it to a client? There's a simple 2-minute video that walks you through and says, here's how your prepayment privileges work, here's how you can work them all together, and they show you some very simple math to help you understand how it benefits you to pay that mortgage off faster and save on interest.
Yeah.
Yeah.
And like that's the reason that clients come to us as brokers, as as the expert to know the prepayment options, the penalties, what that's going to look like if you do have another child, need to move into a different house, if it's portable, if it's, I mean, I could go on and on and on about all the different types of mortgages and programs. But yeah, that's why they come to us, because we know those differences between monolines and banks. So
I think it's fascinating too, in that as a culture, I think we've been really trained on looking at that flashy number of the rate, right? It's like that clickbait. It's that, but I saw this rate, and working with a mortgage broker to help you understand that it's not just about the rate.
Yeah.
There's a lot of other things that factor into that. Like, you could get the lowest rate possible, but it means that there's a bona fide sales clause. You can't, it is literally like handcuffing you to right?
Yeah.
That house, that mortgage. So I know as humans, we want to look at that flashy number of the rate and really focus on that, but really taking the time and educating yourself, because knowledge is power. You want to understand exactly what that mortgage is, what it is you're being offered, how it works, and utilizing a professional. It doesn't cost anything to use a mortgage broker.
No, it doesn't. I get that question all the time, like, oh, well, how much do I have to pay you now? I'm like, well, you don't pay me unless you're using a product or a service that requires additional effort.
Right.
But if it's a prime lender, the lender's paying me, you don't pay for any service from me specifically.
Yeah.
I will say though, over the last couple of years, I have seen the transition where clients do come into the conversation a little more prepared, or seemingly know a little bit more information because they've looked it up online, they've seen it on TikTok, they've seen it on Instagram. My brother's neighbor's cousin's brother got that rate last week, and it's like, well, every single situation is completely different, and it is my job as your mortgage broker to tailor the perfect solution for what your situation is.
Yeah, and I think that's a big challenge in the sense that it's a puzzle. Right? Like each person, that mortgage is a puzzle, and there could be things that factor into your circumstance that may not factor into your neighbor's circumstance. So, for example, let's say that your neighbor only put 5% down and it's an insured mortgage, so they're getting this fantastic rate, but you're self-employed and you have to qualify under a different type of program to look at your income slightly different, and it's a totally different situation. So I think sometimes that little bit of knowledge is
A little bit dangerous.
Yes, and again, sitting down with a professional and being open-minded to say, okay, instead of looking at it solely from let's talk about rate, it needs to be more of, let me tell you about what my goals are. Let me tell you about what it is that I value, what it is that what I want out of this.
Right.
And cash flow. Like, cash flow is king.
Yeah.
Looking at it from a cash flow's perspective of what is my affordability, and because cash flow is it's not looking at your gross income, it's looking at your after tax, what actually goes into your bank account each month.
Yep.
And that from a cash flow perspective needs to be the focus and understanding. Forget about the rate. Mm-hmm. You need to be looking at cash flow, what your goal is, and the terms of those mortgages.
So in your role, you do work with a lot of brokers and agents, obviously, if that's, your core piece of business.
Yep.
If you were to give advice to someone who was looking at working with an agent or a broker, what would you kind of give them advice to look out for?
So a couple things I would suggest. First of all, it's a relationship, 100%. You want to find someone that you feel comfortable with, that you feel that connection with, that you're able to sit down and really talk about and connect on what your goals, what your values are, what it is that you're looking for, and really feel seen and heard by that person. I feel, in my opinion, I wouldn't be the type of person looking for that transaction, like that transactional feeling. I would want it more as a relationship and really fully understand what it is that I need as that mortgage, looking for that mortgage. I would say also someone that's local and in your area and perhaps understands what the market is and what that's looking like. And I would also want to know, how long has that person been around for? Are they constantly out there attending conferences, educating themselves, furthering their understanding? Are they in the know? Those things are important, right? You want to know that that person is knowledgeable, they know what it is that they're doing, and they have access to multiple sources of solutions for you. Yeah.
I think another piece of that too is being out in the community and collaborating with a lot of people in the same industry. So not necessarily mortgages, but like knowing who to go to for a real estate agent, knowing who to go to for an accountant or a mover or a painter, or really surrounding themselves with a good community of people that can help all the way through a transaction, whether it be a purchase or if it's a refinance and they want to do upgrades to their home in the immediate future. So I think that's a big piece of it too. And I guess kind of to piggyback on that, because you meet a lot of agents, brokers, a new agent coming into this industry, what advice would you give them? Because I've been doing this for over 15 years now, and I know what advice I give myself now looking back.
So yes, I do get asked that a lot because I do meet a lot of newer agents that are coming into this community, into this career path. And I do get asked a lot, which brokerage is the best brokerage? I want to join the best brokerage. Which one is the best? And here's the thing, each and every brokerage is going to have something to offer. And I always tell these newer agents, try not to focus so much on the compensation and the splits that you'll be promised. Don't focus on that. Just leave that completely off the table and focus more on finding your tribe of people. So you really need to, choose a handful, go out and interview these people, find out, do I connect with them? Do I feel as though when I have a deal come across my desk and I need guidance on that, if I pick up my phone, is that person going to answer my call?
Right.
And are they going to support me in figuring out a solution for this particular deal on my desk?
Yeah.
Because if all you're going to do is, promises, oh, I'm going to give you this amazing split, I'm going to do this, I'm going to do that for you. Well, at the end of the day, if you don't have someone that's going to be able to guide you and be that true mentor to help you, 100% of zero is zero. Right? So I would tell those newer agents, pick a handful, go and interview them, and really see if you have that connection, that vibe with that person. And that would be the team, because you're joining a team, is really, right? And when you're a newer agent, another thing I always tell my newer agents is that sometimes they feel very reluctant to get out there and talk to clients because they're afraid that they're going to be asked a question that they may not know the answer to. And I kind of giggle a little bit to myself because I've been doing this for 12 plus years. And honestly, every day I get asked something that I'm like, okay, I've never been asked that before. I don't know the answer. And it's okay to say, hey, you know what, that's a great question. Let me take that away. I'll get the answer for you. And people are totally cool with that. That's okay. And to understand that coming out into this mortgage, I was a mortgage agent. That's where I started. And I always said that it's a learning wall, not a learning curve.
A learning wall.
It is a learning. It's literally just like thwack, right?
Yes.
It's just it's a lot. It's a lot. And even to the point of someone like yourself who's been doing this for 15 years, you face different challenges. because having been in this space for 15 years, you're often looking at all of the new rules that are coming in, all of the government regulations. We are a heavily regulated industry.
Yeah.
And so for someone who's been at it for 15 years, it's tough because you're looking at it and going, well, like, why can't I just do this? Why is it so, like, why do I have to provide this, and this? It's different, right?
You didn't have to send in every single page of a bank statement if the last 3 pages are just a jibber jabber.
Yeah,
you know?
and it's like you look and you go, so yes, those newer agents are coming in, and it's a learning wall. There's a lot to take in. However, they don't have that 15 years of going, oh, well, now I have to relearn this, and this new change has come out, and now I have to, right? Because you're constantly having to do that.
I never really thought about it like that.
It's true.
I'm facing more challenges than I even knew.
Yeah, right? And it's a lot. Like, I do see that in some of my brokers that have been around longer, that frustration of, and even, you know, helping clients understand, and we touched on this, we were chatting earlier about how sometimes client expectation in the world we live in today, you know, you swipe right, you get this, like it's a button, and I just get it like this. Mortgages are not like that. Again,
not.
We are heavily regulated, which is a good thing.
Yeah.
It protects us as Canadians. However, when that mortgage agent says to the client, listen, I need this, and this, and by the way, I may come back to you and ask for more.
Yeah.
It is not by any stretch, the mortgage agent's not trying to be difficult. It's not the underwriter at whatever lender you're going to is going, oh, I'm having a bad day, I'm just gonna ask for the world from Vanessa.
Right.
It is literally heavily mandated. There are certain documents that we need to provide in order to be compliant.
Yeah.
And I'll give you an example. You know, a client sends in a redacted bank statement. So that means they've taken a big black Sharpie and they've crossed out all this stuff, right?
Yes.
Because it's none of your business. Okay, well, explaining to that client, as a lender, we are constantly being randomly audited, which means those governing bodies walk into our offices and they pull 100 files. And
At
they go
any time.
Anytime.
And there's no warning.
No warning.
You hear the heels hit the floor and you know they're in the building.
Right? And they're going to pull those files. And you have to think about it. And you look and they go, hang on a second. I see a redacted bank statement in here. And suddenly, First National is being charged for non-compliant mortgage lending, which goes out into the public space. Like, you think we're doing that reputational risk just because you don't want to show us that you shop at the LCBO in the local cannabis store?
Yeah. You don't care about that. No.
It's like, right?
Yeah.
That's, you know, it's again, you have to.
Well, and it's the regulations, but then it's also all of the policy changes that happens between each of the lenders too. Like, one day you can do a maximum of this loan amount, but now they've changed it and now there's a sliding scale, or, I mean, I know that I'm talking a little out of turn here, but it's not just the regular changes, it's also the policy changes within each of the different lending institutions.
Yeah, so there is a lot going on. To go back to that analogy, it really is not swipe right, get a mortgage. It just isn't, right?
No.
There is a lot that goes on behind the scenes. And I think, again, utilizing a professional like yourself, it really helps those clients navigate that behind the scenes. And the other challenge too is that if you're walking into that bank space, I'm not going to paint them all with the same brush, but if they're pulling up your beacon and they look at your and they go, oh, yeah, sorry, there's nothing we can do. It's a decline.
Yeah.
And they're not necessarily taking that time to help that client understand what is coming up on that beacon.
Right.
Whereas sitting down with a mortgage broker, you know, that mortgage broker is going to take the time and say, hey, listen, here's where your beacon is at, and I see that you have a collection here from Teppermans.
Yeah.
And the client looks at you and says,
No.
what do you mean? I paid that.
Yeah.
That shouldn't be on there. Well, it is. It's on there. And the broker has that 1-800 number to Equifax that you, the broker,
Yeah.
can pick up the phone If you have the documentation proving that this has been paid, this is falsely on my Equifax, I need it removed, that broker can assist with that and get it done within 2 or 3 days.
Yeah.
And suddenly you're going from a decline to
An approval.
I'm pre-approved,
Yeah.
I'm out shopping for a home, right?
Well, and it's also understanding the credit bureau too. I mean, we take a lot of time to like understand it and learn it. And for example, I had a client never ever laid on a never laid on a credit card. Had 2 trades, but both of them were over that 50% capacity.
Utilization.
Right. And so I said, pay it off, and we'll pull again in 3 weeks. And I guarantee you, it will increase your score. And it went up 111 points in 3 weeks. So now they're approved. They're going to be closing on their house at the end of this month.
Yeah.
But it would have just been a straight decline.
Yeah. And not just a straight decline, but if you don't have the knowledge and understanding as to why,
Right.
then you
How
have
do
no
you fix
tools
it?
to fix that.
Right.
You're forever in that limbo. So working with that professional that's there to help you and help educate and help you understand how to get ahead.
Yeah.
Yeah.
I mean, and it doesn't take long, and I know I like to at least see a file. So if a client is coming to me and they're telling me, you know, like we've had credit issues, or right now we wouldn't be approved for a mortgage.
Mhm.
Okay, but like let's sit down and take a look at it, because I can at least tell you, okay, today you're not approved, but if we do these 4 things,
Here's the plan.
or we put a plan together, we will make sure that in 4 to 6 months' time, that turns into an approval.
Yeah. So important.
Depending
right?
on what the situation is. I shouldn't say 4 to 6 months, but like, you know, sometimes it takes a year to work with a client that was initially a decline.
But how grateful are those clients
Oh,
when
so
they
grateful.
do get into that home finally, and
Yeah.
they're just like, wow, like we could not have gotten here without you. And that's why you do what you do, right?
Well, and they become like they champion
Your biggest
me
fans,
all
yeah.
over the place. So
Yeah.
it's, you know, it's well worth it in the long run.
Yeah.
And I get, you know, the satisfaction of helping someone, which is what I do this for.
Yeah.
So,
Yeah, totally.
well, this has been so much fun.
Yes,
Thank you so
yes.
much for joining us
My
today.
pleasure, absolute pleasure.
Thank you so much for joining us today. Don't forget to like and subscribe. We've got lots of content coming up in the coming months, and you're not going to want to miss it.